The second statement that we discussed on day one was assets balance sheet. And balance sheet, I am sure you will recollect, has got two components, two sides. The balance sheet has got two sides. The one side that we have in the balance sheet is the liabilities, and the second side that you have is the assets. Liability would mean what is that which company owes to others. Assets would mean what is that the company owns. Within liabilities, you would remember there are three categories of items. One is equity plus the retained profit, and I'm sure you understand what is retained profit. Retained profit is the profit which has been earned by the company and kept in the company for the future expansion programs and things like that. Then you got a long-term liabilities, and I'm sure you will remember long-term liabilities would mean liabilities of a business which are to be discharged by the business beyond a period of 12 months. Those are all long-term liabilities. And then you got a third component in the liability side, and that is non-current liabilities. And what are the non-current liabilities? Non-current liabilities are those liabilities of a business which are to be discharged within a period of next 12 months. Then you got a asset side of the balance sheet, and again assets, you got a long-term assets and the current assets. Long-term assets would mean assets which are going to be used in the business for all times to come, for long period to come, like long times to come. So all your building, land, property, plant and equipment, computer, furniture, tangible and intangible assets are long-term assets. So these are known as long-term assets, and these are also known as fixed assets, and these are also known as non-current assets. So the three names: long-term assets, fixed assets, or non-current assets. These three names are for the same type of assets, and that is the assets which are used in the business on a continuing basis. Against that, you have a current asset. So current assets are the ones which are expected to get converted into cash within a period of 1 month. So that is your liability side, that is your balance sheet, liability side and the asset sides.